Good morning, everybody, and welcome to the Healthcare and HealthTech Trade webinar. Today, it's a bit of a gloomy day in Singapore. Hopefully, it's much better for you over in the UK. Thank you very much for joining us promptly for this activity, and we hope that it's going to be extremely valuable for you as you look to expand your business into the region and hopefully starting with Singapore. So my name's Nicole Wharf. I'm the Business Services Director at the British Chamber of Commerce. And today we welcome really a very formidable lineup who are going to go through some structured pieces of information, which undoubtedly are going to be really important for you to be aware of as you start your journey going forward. We welcome KIMBERLY KHOO. So I'm going to ask all of my colleagues on the panel to turn on their cameras for a moment. Hello, KIMBERLY. KIMBERLY is the Regional Director for Europe for the Singapore Economic Development Board. She's based in London, and she's going to give us a market overview of Singapore healthcare and the health tech sector. And then I welcome THALIA. THALIA, if you're on camera, that would be wonderful, so people can see you. THALIA is the Managing Partner for Healthcare Advisory for Asia Care Group. And she's going to cover off beyond Singapore, accessing opportunities in Southeast Asia. Now, it's undoubtedly going to be mentioned multiple times today how Singapore is the absolute perfect launch pad to expand into the region. So I'm sure that's going to be an incredibly useful piece to cover. And then we'll welcome Nicholas Hanna, who's a partner at Pinson Masons, well-known British law firm here, about doing business in Singapore, but specifically doing business as a healthcare or health tech organization. And then last but by no means least, one of my possibly most important areas, which I believe often gets overlooked for market entrance, we'll have Anand Sivananthan from Bird & Bird. I don't know, again, if Anand, you're there on camera, but you will see him shortly. He's going to be giving us an overview of IP in Singapore. And like I say, this is an area which often gets overlooked, but is incredibly important when you're considering your journey of expansion. So first and foremost, however, I'm going to give you a little bit of an introduction when it comes to both Singapore on from a macro perspective, and also a little bit about the Chamber. Some of you may be thinking, well, Chamber of Commerce, I know them locally in the UK. Why the Chamber? Why are we coming through the Chamber, and why is the Chamber presenting such information to you now? Well, it's a very good question. We are here and we're very well established. We represent a country in a country, and Singapore itself is often known as the little red dot. I say it's small but mighty. It has a population of 5.7+ million and located in the South China Sea. It has a wealthy population, but it is a small population. But absolutely, it's an influential trading market, particularly for the region. So it has an open economy, and as the most trade-dependent economy globally, when trade is up on a global scale, Singapore generally picks up as well. Now, as much as GDP did drop last year, as with the rest of the world, Singapore is predicted to still increase this coming year. So this 2021, the Monetary Authority of Singapore is predicting an increase by 5.5%. And this is much due to Singapore's phased and level approach of resumption of business post-COVID. Singapore is well known as a major hub for business, but also for travel. And absolutely, Singapore government have been kind of resuming the means in which business can continue on a steady basis. So there's very strong economic fundamentals here in Singapore. There's no external debt, reserves equivalent to 100% of its GDP, and it's a AAA credit rating. So the government has continuous cycle of economic strategies to move Singapore up the value chain. Through each step, although each step is becoming harder and more capital intensive, it's extremely strategic when it comes to its regional presence and also looking forward in its long-term relationships with other global trading markets. So, for example, it has maintained the ease of doing business through the World Bank ranking as the second in the world, and it's the #1 for Global Competitor Index. So that was the most recently released last year for the World Economic Forum. So there's a really strong foundations when it comes to doing business here, and they are maintained on a year-by-year basis. So how does Singapore achieve these rankings? Well, it's a mix of policy and market attributes. So there's a pro-business policy that includes tax and talents. There are rising taxes, but then again, there's considerable initiatives around encouraging companies coming into market. There is regulatory efficiency. It's easy to start, easy to run and do business here. And there's the rule of law, which I'm sure the two lawyers on the call, Nick and Anne, are going to go into more detail. But there is a low corruption here in Singapore. There's a very strong IP. Can't necessarily be said around with markets around us. So hence that is a really strong and valuable reason as to why to start out here. And of course, we're very well connected. So Singapore remains the hub for international links. And investment has been made into these different infrastructure elements. And we also continue to work in open markets, so the free flow of goods and capital. So there's the free trade area of ASEAN. The UK FTA was announced 6 months ago and is in action right now. And then the most recent being the CPTPP, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, which the UK has obviously submitted its intention to be part of, along with Singapore. So there's a lot to look forward to. And talking about ASEAN, so as I say, very few companies come to Singapore to purely focus on this market, and often their long-term vision, understandably, is to expand into the different markets across the region. Southeast Asia, as you can see in front of you, and I've specifically pointed out all the different connections that the Chamber ourselves have. So this is coming back to the point, well, why the Chamber? Why are we presenting this information? We have a major initiative as a Chamber of Commerce overseas to support the interests of UK businesses to develop and expand into different markets. And here in Singapore, in appreciating we're often the launch pad, we capitalise on all of our connections in the region to make sure that you're fully supported as a business when you look through into other opportunities. And how specifically do we do that? Well, we have 2 core teams here in the Chamber. I think this is really important for people to understand, just so it has context, but also so you can see that we really do support the full cycle of business. So when you're looking forward, you're not doing this alone. So as I said, we have the trade services team, and we also have membership. And arguably, as I say, these two operational teams together support the full cycle of business. Trade services, as I say, is predominantly around market entry. And we do this in collaboration with our other partners. So the Department for International Trade are obviously great colleagues here in Post. We work collaboratively on a constant basis to support UK businesses, and also the likes of the Economic Development Board. KIMBERLY is on the call today, and also other partners. And from there, many companies then would transition into membership once they're based in country. So we can support you to establish and nurture and grow, and then from there on, look into expansion. Let's not just talk about me and go on what I'm saying right now. Last year, in 2020, it was an incredibly successful year for the trade services team of the Chamber. We generated over $47 million of UK trade. So that translates into around £25 million. And that was by supporting hands-on 303 UK SMEs. So that was either to establish, develop relationships, or continue their flow of business. And so specifically, please do bear in mind, these are the different areas we can help you. This sharing of information is the first thing, and then obviously implementing a strategy behind that as well. So that, as I say, there's lots of different ways in which we can be hands-on. So I'm going to leave, before I hand over to the first speaker, Kimberly, I'm going to just leave you with a bit of food for thought. So as you go through this presentation, please do have a think about, well, what are my route to market options? Who are my target customer, my target partners? Price points, how am I going to position? What is my rollout framework? So what is the timeline, and who am I going to need to work with? The language, the culture, the ways of doing business in a different market. How can you glean off as much information in advance of taking that leap of faith, so that you're as well positioned as possible, and absolutely using the source of today, but also other connections such as the Chamber going forward. They're here to help you. And then sector specific information or regulation around, IP, as I've said, or other kind of elements in doing business. So I'm sure THALIA, in fact I know because I've seen her slides, THALIA will be going into a huge amount of data and really valuable information around the means of doing business, the opportunities, and where you can see growth and trends. And similarly, Nick and Anand will be going into the deep dive regulatory side. So please do consider these elements as we go forward. It's a real pleasure to have everybody on a call. Towards the end, we will have questions and answers. So please do pop anything that you have into, I think it is the Q&A box. Yes, I've just checked. Not the chat box, the Q&A box. And I'll pick that up and we can go through those towards the end. So without further ado, I'm going to hand over to the first speaker, Kimberly, from the Singapore Economic Development Board in the London office. Kimberly, good morning. It's great to have you.
Hi, Nicole. Thanks for having me.
Pleasure.
Okay, so should I set up the slides right now?
Please do. Yeah,
okay.
I will stop sharing and allow you to take over.
Okay, so I've got it open. Yeah, can we see the slides?
Perfect.
Okay, great. So hi, everyone. Thanks for joining us today. We have quite a packed agenda, as Nicole mentioned. So I'll be covering an introduction to Singapore's healthcare ecosystem. And I'll try to keep it under 15 minutes, but there's a lot of content. So if you have any questions, just feel free to include it in the Q&A box and we can go through it later. So before I dive into the content of the presentation per se, I do want to introduce the Singapore Economic Development Board, or the EDB, so that everyone here is familiar with the job that we do and how we actually partner with our close partners such as BritCham as well as DIT. So the Singapore Economic Development Board, or the EDB, is the lead government agency in Singapore that plans and executes economic and industrial development strategies for Singapore. Our mission is quite simple. Essentially, we look to create for Singapore sustainable economic growth with vibrant business and good job opportunities. What this looks like is that we, on a day-to-day basis, our job really revolves around firstly attracting foreign direct investments. So we work with companies on a one-to-one basis to understand their growth plans for the region, and then we try to help them, to support them to actually get started in Singapore. The second part of our job is really in looking at growing industry verticals. So you'll hear a lot of talk around later in my presentation around how we're building the healthcare ecosystem. And we always use this term because we want to ensure that we're not just looking at a company that's coming to Singapore and working in a silo, right? We want to actually be able to develop the entire ecosystem, and the healthcare sector, for one, is very important to us. So I'm glad to see that we have a good panel of speakers today that will really help you to understand what are the different receptacles and what are the different things that you need to understand before joining the ecosystem today. And the last part will be enhancing the business environment. So for Singapore, as Nicole mentioned, we are a fairly competitive regulatory environment. We do have taxes that are in place that are supportive of business activities. And I won't talk too much about this because the other speakers will be covering that as well. But looking at the entire business environment is also a part of EDB's job. So now that I've covered an introduction, I have three parts of the presentation. So I want to cover firstly, what does the healthcare sector in Singapore today look like? I'll spend the second part talking about the healthcare industry. So I'll explain a bit about what are the different companies that are in Singapore, what are the activities they are doing in Singapore, and the last part would be some case studies of health tech innovators that you could actually hear about and be a bit inspired about in their own journey in Singapore. So I'll go straight into the first part of the presentation. I want to talk a bit about what Singapore's healthcare system looks like. So I've summarized it into three pillars in this slide, and these will be underpinned by two aspects that are quite common across all the healthcare sector. So the first thing, as Nicole mentioned, is that Singapore in itself is a very small nation of about close to 6 million people. We're on the way there. But what we have been doing quite well in the past 2 decades is that we have really built up a position as a healthcare and medical hub in APAC, being able to actually draw over 350,000 patients annually. This is quite important because on top of just drawing local residents who are patients, we are also looking at actually drawing tourists from around the region who are looking to come to Singapore to actually be part of the medical tourism ecosystem. So they're coming to Singapore to seek treatment for diseases that they may not be able to do so back in their home country. And prior to the COVID pandemic, this was something that we were seeing a lot. So there was a lot of infrastructure and a lot of regulations actually built around to facilitate people who are looking to come into Singapore for such reasons. And why are they looking to come into Singapore to seek treatment? I think this is really going back to our strong fundamentals in healthcare excellence with world-leading healthcare infrastructure. Singapore in itself has many hospitals that are already accredited by the the JCI. And where they're coming from is that there is a lot of introduced infrastructure that is very supportive of actually patients, healthcare providers, insurers, and generally it's a very easy ecosystem to navigate. We are also able to actually really be looking at the entire quality of care journey, whereby we're looking at patients not just before they come into the clinic, we're also looking at their entire journey and to ensure that even once they leave the hospitals, they are plugged into our digital ecosystem so that we know where they are and what treatment they would require. The last trend that we're seeing of these 3 pillars is really a shifting demographics, as well as changing lifestyle demands and expectations in the Singapore population. Singapore is not alone in this, but we are one of the fastest aging populations in APAC, as well as in the world. And the way that we're looking at this is that we are measuring seniors that are above the age of 65. So anybody above the age of 65 would be considered a senior. And by 2030, actually, over a quarter of the population would be 65 years old or older. What this means is that this is creating a lot of pressure on the local healthcare ecosystem to be able to look at ensuring that this part of the population will be able to actually achieve the right quality of care as they continue towards the end of their lifespan. And where we're seeing is that there is a lot of demand for new products and new services that can be introduced into the healthcare ecosystem to actually help to elevate this healthcare burden on the Singapore government. On top of that, there are some diseases that are more prevalent in this region. One of them is diabetes. So Singapore in 2016 actually declared a war on diabetes, of which we declared it to be something that is affecting actually 8% of the population. Based on current trends, we expect that this is going to actually continue to grow, and this is causing a lot of burden as well on the healthcare ecosystem. So there are a lot of different things that we are looking to address, and what we will continue to do so over the next decade or so is really to ensure 2 things. The first is universal coverage for citizens with multiple layers of care. So healthcare spending in Singapore is very heavily subsidized depending on a few factors. So for example, if you're going to a hospital, there are different classes of wards, and depending on your income levels as well as your own expenditure, they would have different levels of subsidies. So that's a system that's going to continue. And the second is that due to all these different changes, we're seeing rising government spending as well as the consumption of healthcare services that will grow within the next decade. So by 2029, if we look at the percentage of healthcare spending of GDP, we're actually on track to looking at something like 9% based on external reports. So there is a lot of demand for good healthcare services, and that's where health tech innovators could actually come in to really be part of this ecosystem and to bring their services to Singapore. If I go to the next slide, so I want to spend some time also talking about the transformation of Singapore's healthcare system, because this is quite relevant to the innovators that we're having on this call. So the Ministry of Health is our main government body that looks at managing the entire healthcare ecosystem. A few years back, they actually introduced their master plan around these 3 pillars. The first is beyond healthcare to health, where we're not just looking at actually treating people who are sick, but we're looking at actually engaging citizens or residents in Singapore that are all the way from the beginning, where they're still healthy, to ensure that we're managing their current lifestyle. We're encouraging them to keep a healthy lifestyle such that they actually help to elevate the healthcare burden that hospitals are going to need to face later on in their lives. This is quite important because you'll see that this also brings into the foray a more important role for the Health Promotion Board, which is a statutory board under the Ministry of Health that actually looks at essentially working with the local population to encourage them to lead healthy lifestyles. The second part is beyond hospital to community. So due to all these different factors that we're seeing, we do recognize that there's going to be a higher pressure on hospitals, and we want to ensure that how we able to actually encourage citizens to move out of hospitals to go into community care settings. And through this, we'll be introducing a lot more polyclinics. We'll be working with our local GP network to actually ensure that if you're sick, you don't just have to go to the hospital, but you can actually spend less days in the hospital and you can actually continue your care journey outside of the hospital setting. And lastly, beyond quality to value. Because a lot of the healthcare spending in Singapore is subsidized, it is quite important from the government's perspective to ensure that we can look at actually getting value for money when it comes to some of these investments that we're making. So this is going to be a big part of our strategy moving forward as well. And a key part of addressing these three verticals of the master plan for the healthcare sector is actually looking at digital technologies, where we're looking at using such technologies to actually look at addressing unmet needs in the Singapore population around these 5 pillars, right? So we're going to be using digital technologies to actually understand for a particular individual, things like family history, genomics, environment, and their general health condition to see how we can actually help them to better manage their health. So going to the next slide, I also want to share some upcoming developments that are quite interesting for everyone on this call to be aware about. So in Singapore, there are 3 key things that we're working on. The first is really the expansion and construction of new state-of-the-art public hospitals. So there are already over 20 hospitals in Singapore today, many of which are public hospitals. And next year in 2022, we will actually be introducing Singapore's first smart hospital. And it will be based in the north of Singapore. It's based in Woodlands. And what is quite interesting is that this particular hospital will be part of a larger complex whereby we have 4 different setups within that area. And the objective is actually to ensure that patients who are actually seeking treatment can actually achieve a very consistent quality of care across any part of that ecosystem. So for example, if they were to go to a polyclinic within that setup, after they check out the hospital, they will have all their records stored in the system. They're able to actually view it from their own mobiles and to ensure that where they're at their own treatment journey. So this is quite important because of the smart hospital. We will be actually looking at integrating a lot smarter solutions into the ecosystem to ensure that this is going to be a very successful pilot model for Singapore. The second part, as I mentioned, is that because of our shift of looking beyond just the hospital setting, we are also going to be adding a lot more polyclinics and community care facilities. So a polyclinic is essentially a public GP setup, if you may. And in Singapore today, there are already a whole bunch of them in different neighborhoods. So we're going to continue to grow that so that anyone who's looking for treatment can actually access them very easily somewhere in their neighborhood. And we're also going to be adding a lot more community care facilities, where if for example, you don't need urgent medical help, but perhaps you're seeking treatment for a long-term medical condition, and you do need to see someone frequently and be part of a community care facility, then there are going to be a lot more options for you. And the last part would be around actually looking at increasing the adoption of AI, robotics, as well as other digital technologies in the healthcare ecosystem. Today, Singapore has already started doing this in some of our polyclinics. So for example, we've introduced the Selena Plus system, which is the image that you see in the slide. So what it does is that it uses AI algorithms to actually help to detect eye-related diseases, for example, diabetic eye disease. And this pilot has been running quite successfully. So it's going to be rolled out to all hospitals next year. And we're also going to be trying to build on this system to look at other conditions as well. So what all these developments are essentially leading to is really giving rise to the need for new technologies, solutions, and partners through one-to-one engagements and public tenders. So for example, the Ministry of Health, because of their role, they would be the right person to actually oversee the largest healthcare projects in Singapore, and also public tenders that they do publish every here now and then on their own website as well. So this brings me to the next part of the presentation. I want to share about the Singapore healthcare industry. So I've talked about the healthcare system. Now let me talk about the healthcare industry. So if you're not familiar with Singapore, Singapore is today actually a leading biocluster in Asia. So over the past 2 decades, we have started to really build up the healthcare and life sciences sector in Singapore today. So in this slide, there are a lot of details, but I won't go into all of them. Essentially, you'll see that in the different locations of Singapore, so all the way to the west, for example, we have the Tuas Biomedical Park, where a lot of manufacturers have also set up their own manufacturing facilities. where we have over actually 60 manufacturing facilities today across pharmaceuticals and medtech. Beyond that, there are also a lot of commercial RHQ activities that are being set up. So for example, companies will actually be setting up their operations in Singapore to actually service Southeast Asia or APAC, which is a fairly common business model that we see. And then we're also seeing a lot of R&D activities that are taking place in Singapore. Specifically for medtech, I wanted to share this as well because I know we have a few medtech companies joining us on the call. So we also have a very diverse base of medtech companies in Singapore across these different areas. Those, for example, to share an example, in eye care, companies like Alcon or Hoya actually have their key site for manufacturing of contact lenses in Singapore, alongside companies like the life sciences tools, implantables, and medical equipment space. We're always happy to be speaking to companies on opportunities to either manufacture in Singapore, to set up innovation activities, and to also look at commercial operations from Singapore. The next slide would be also to share the developments that we're seeing in the vibrant health tech ecosystem. So health tech in itself has been something that I guess came up a lot more recently in the past 2 to 5 years. And today we're very proud to share that we have a very vibrant health tech ecosystem comprising of both local, foreign startups, corporates, accelerators, innovators, etc. And this is really quite a comprehensive ecosystem whereby there is a lot of support. If you're looking at entering the ecosystem, there are a lot of potential partners that you might want to work with. And we wanted to share this to also let you know that, if you're looking at considering coming to Singapore, you're definitely not going to be alone because there are so many people that are also on the same journey as you. And why are all these different types of companies actually deciding to come to Singapore? I want to just quickly summarize this. There's going to be a lot that we're going to go through later on in the other presentations. So for this particular slide, if I can summarize Singapore's strengths, these would be in 4 areas. The first is in regulation, whereby we are very well recognized as a regional regulatory thought leader. And at the same time, our policymakers, such as the Ministry of Health, are also very flexible and adaptive towards the needs of the industry. So they've also set up, for example, a regulatory sandbox to pilot new and innovative healthcare models. This was very successful, and they've since introduced the regulation that supports that. In the second area, when it comes to healthcare, it's very important that we have a very strong reputation that really commands a trust premium. And over the years, we've really taken deliberate care to build this up. The next part is that when it comes to the introduction of digital technologies, it's also important that Singapore becomes a trusted location for data security, integrity, and standards. And these are areas that we're continuously monitoring and we want to work on as we move forward. And then for the 2 other areas, when it comes to talent, we have a deep bench of both medical as well as engineering talent and digital talent, which are all critical in this ecosystem. And in the end, we're also looking at introducing various programs, training grants to actually help to support the building out of talent in this space. And lastly, under infrastructure, we also have introduced the National Electronic Health Record System, so NEHR, which today is essentially it's a digital record of any patient that has seen and been part of the healthcare ecosystem in Singapore, and it can be easily accessed through cloud providers and practitioners in Singapore. Also, generally speaking, we also have the second best connectivity in APAC. So coming to Singapore, setting up your digital solutions and trying to export that to the rest of the region, we are able to support that through some of the infrastructure that we have. Okay, so that is a lot of content. Now let me dive straight into looking at what are some of the potential case studies that we've seen of companies that have been on the same journey as you. So when it comes to health tech companies of any size, really, our vision for them is to be able to come to Singapore, to be able to pilot use cases, commercialize and scale in Singapore through working with demand drivers, corporates, accelerators, incubators, public agencies, R&D institutes, and universities. And then 2 things, so actually doing all that in Singapore and also trying that out in the Singapore market as expected. But critically, we also want to position Singapore as a place whereby you can innovate and work on a pilot and roll that out to the rest of the region, right? So we're not just looking at what you can do in Singapore and what you can sell in Singapore. So moving on to the next few slides, there are 3 different types of models, if I may say, to actually partner in Singapore. The first is partnering with corporates. So in the telehealth space, where we have quite a few concrete examples of corporates that have come to Singapore to actually partner with insurance firms, for example, to partner with Grab, which is our local version of Uber, essentially. It's a huge conglomerate. And Ping An Good Doctor, for example, which is a telehealth provider, actually managed to partner with Grab to tap on their customer base and financial payment system. So there are a lot of different types of models when it comes to corporate partnerships. Essentially, we also see some corporates deciding to actually invest directly in startups in Singapore today. So there are different types of models that we could consider. And the next slide, we also have a different type of partnership with public institutions. So I wanted to share this interesting example of Singapore's Health Promotion Board actually working together with Apple on population health management, whereby we've developed the first of its kind health program that uses technology to actually look at encouraging Singaporeans to keep healthy. And this really goes back to our initial strategy of moving beyond healthcare to health. So this system called Lumi Health actually leverages data analytics to really provide personalized programs and coaching reminders for a particular person to actually look at going for health immunization, as well as looking at wellness challenges and different systems. So this has been ongoing so far, and we're quite happy with the progress of this initiative. Additionally, we also have many strong research institutions and hospitals that are looking at actually partnering with corporates. So for example, in two key areas, the first being chronic disease management. We see that we will also introduce the diabetes clinics of the future, whereby we're looking at introducing personalized diabetes care based on analytics and AI, advanced imaging capabilities, and behavioral analysis. And we also rolled out a remote monitoring pilot with our polyclinic system for hypertension and diabetes. In the second area, in genomics, we have also launched the Singapore 100K cohort, which is a comprehensive long-term population health study to be able to understand the different types of diseases and conditions that may be prevalent in the population. So moving to the last two slides, I also wanted to share that there's a lot of ongoing activities to partner with providers in Singapore for integration and commercialization. So for example, in preventive care, all the way to diagnosis and all the way actually to patient empowerment through talent monitoring. There are different types of examples that we see here, such as Philips partnering with the Changi General Hospital in Singapore, Ping An Good Doctor partnering with the NUH system, as well as SingHealth, as well as the Bioformist working in the National Heart Centre in Singapore. So there's a lot of content. I just want to land on the last slide. So if all this interests you at all, I think the first step really is to have a conversation with BritCham as well as EDB, because our role is really in actually helping you to connect the dots and to be able to direct you to who might be the right person to speak to. Beyond that, you see in the slide that there are really a lot of different ways that you could approach the ecosystem. So for example, funding-wise, there is a network of VCs that are looking at life sciences, and they'll be happy to really understand some of the opportunities that you might present to them. There are trade events that are happening later this year, fingers crossed if they can do it in person. And also when it comes to different healthcare partners, accelerators and incubators. So there are a lot of different ways you could get started. And we just wanted to share this presentation with you so that you know where you can actually land on. Yeah, so this is my last slide. Thanks very much for paying attention to this. Thank you.
Thank you, Kimberly. That was such a thorough foundation of information. A lot to take in, you're right. So we are recording the session. This will be available afterwards. Thank you. I'm going to swiftly move on to our next speaker, which is THALIA GEORGIou. I hope I've pronounced that in the right way. I always seem to get caught with that. But THALIA, if you'd like to share your slides and take over.
Thanks, just unmuting myself. I'm just busily talking away to myself. Let me just see if I can bring up the slides show from the beginning. Nicole, just what timing have I got? Just so I can. So
you've got 15 minutes.
Okay, so I've got 15 minutes, I've got 20 slides. I've streamlined them a bit, but hopefully we'll get through them all. I speak very quickly, but it's good that it's being recorded. I've also got a lot of content in here. So I think the presentation that I'm going to give dovetails very nicely with Kimberly's. What I've tried to do in this presentation is give more of the kind of facts and figures, if you like, both around the Singaporean market, but also around what's going on in the region generally. My personal background, I run a healthcare consulting firm, and my area of specialism is around healthcare financing. And I did speak to DIT in preparation for this, and they said, look, the one thing that companies really need support with when they come out to other parts of the world world is to think through the business model, because oftentimes the solutions, particularly that some of the digital healthcare firms have got, are really some of the best in the world. But when it comes to thinking about what's the underlying business model that's going to work and succeed in these markets, that needs a bit of thought. So I've tried to very much focus on the way in which the finances work, because I think that's going to interplay with that question of business model. But just to give you a brief overview of the markets in Asia, we start from a pretty low base when it comes to health financing. So most markets are spending less than 5% GDP. Singapore, we spend a bit more, around 6.5% GDP. But in markets like Indonesia, they're spending around 3% GDP, and some of the others are spending very little as well. So we start from a very low base, less than half, in many cases, what the UK is spending on healthcare. And within that, I'll go on to explain, we've got a segregation between public and private. And quite often we've got big public systems that are essentially doing the equivocal job of the NHS, that are surviving on 1, 2, 3% GDP. So a fractional amount of what the NHS budgets will look like. And that position is changing, and we have got much faster growth in terms of health spending, but it's going to take a number of years for most of the Asian markets to get up to the same level of spending as you'd see in the UK or OECD countries. And obviously we've had COVID, which has impacted the ability of some governments in the region to really finance that level of increased health spending as they were before. And that's particularly true for some of the markets like Cambodia, Laos, Indonesia, Vietnam, and so forth, who have been particularly badly hit. And so that's kind of the very first point that I guess I want to raise, is that when we're talking about these Asian markets, you'll see lots of numbers banded around. You know, these are $1 trillion markets and there's huge growth opportunity, and that's very true, but we have to caveat it by saying that we're starting from a low base and a fractional amount of healthcare spend to what we see in the UK. Let me just try to move my slides on. And part of that is reflected in what we see as kind of the wealth inequity. This is a really important point as well. So in most healthcare systems in Asia, even from established markets like Hong Kong and Singapore, right through to other markets that are perhaps more in the developing stage, we see huge levels of wealth inequity, which is reflected in oftentimes in health inequity. Singapore have been a bit better at kind of resolving that issue, but in most other markets it's an issue. And what does that mean? That means in practical terms that we often have these large social health insurance type systems which are surviving on a very low amount of spend, that are coupled with extremely expensive and quite small private healthcare systems that have largely catered to high net worth and ultra high net worth individuals. So we have this kind of dual system that exists in most health economies. You can see on this graph here where we've got wealth inequity mapped out, the UK actually looking like a pretty egalitarian place in comparison with some of the markets in Asia. And as these markets, Philippines, China, Thailand, and so forth, as they migrate towards higher income countries, we expect them to follow a similar route to Hong Kong and Singapore. So we expect that wealth inequity to rise. And therefore, we're going to continue to see this kind of dual system of expensive private coupled with large but kind of shallow, oftentimes public healthcare systems. So I've picked Singapore just as an example because we're talking about Singapore today, just to give you a sense of what's going on. The market in Singapore, much like many of the markets in Asia, are beginning to see a major increase in the number of individuals that hold private medical policies. And that's in part because people want access to care very quickly. They don't want to have to wait for services. They want access to be able to use products in other markets, not just Singapore. So we're seeing a big increase in the number of people that are holding private health insurance products. And the reason I wanted to raise this is when we look at where's the growth opportunity, where are these markets going? Oftentimes, particularly when we're dealing with companies that are coming out from the UK, they've historically had a good relationship with the NHS and other public healthcare systems, and they think that coming out to this part of the world, the same would be true. That would be their first port of call. And in fact, whilst there is opportunity with the public healthcare systems, a lot of the growth that we're beginning to see is actually coming from growth in that private sector space. So as people become more economically active, as middle classes grow, we're beginning to see a growth in some of the private health financing mechanisms. So our advice is always, when we're talking to UK firms, yes, think about what you can do with the public sector, but bear in mind that they're going to have pretty laborious tendering processes and so forth. But don't, oh, sorry, my doorbell's going in the background. Don't forget about the private sector, because the ability to do a deal may be much quicker, and a lot of the growth that we're seeing is coming from this space. So just in terms of current health expenditure, again, I've picked Singapore, but this could be any market in Asia that we were looking at. We see a larger amount being spent on curative care than we do see going on prevention. Bear with me 1 second. Sorry, the perils of working from home. So we do see the majority of spend going into curative care, and that's going to be a continual problem to try to manage, because we are seeing rates of non-communicable diseases rising, and here you can sort of see CVD. This is actually it looks quite severe, but actually this is one of the less severe examples. In some markets in Asia, we're seeing a doubling of diabetes, we're seeing a doubling of cardiovascular disease. So whilst we've got this spend being skewed toward costly acute care, actually the number of patients that are going to require support in the community, if we've got any hope of managing the financial envelope that we're working with, plus providing appropriate care, is going to need to increase substantially. And this is kind of reflected in kind of the bed shortfall projections in Singapore. Again, we could be looking at any market. They're all facing shortfalls. Some of them are very significant, but we're projected to have several thousand beds in Singapore short in a very short period of time. In some of the large markets like Indonesia or China, we're seeing millions of beds being required if we were to deliver care in the same way that care is being delivered today, with what we know about aging and with what we know about disease. So we're going to have this issue of not only are we working against a slim financial envelope, but we're also dealing with increased levels of disease and not enough infrastructure in order to be able to cope and respond. And this just highlights the point, again, I've used Singapore here, but we're going to see a doubling in the number of people aged 65 and over between 2005 up to 2030. So there's going to be sort of substantial substantial requirements around rethinking the way in which care is delivered. And on the right hand side you can just see the causes of death there, and a lot of those are obviously non-communicable diseases, some of which have increased markedly. And just to kind of make this point, I guess, in a different way, this looks like a slightly morbid slide, but we've looked at place of death across a number of different countries. And you can see in the UK, there's been a momentum that's been going for quite some time to try to allow people the freedom and capability to be able to die in place or die at home. And so the level of in-hospital deaths has dramatically fallen. If you look at markets like Hong Kong or Singapore, and bear in mind that Hong Kong and Singapore are, if you like, developed Asia, and others tend to migrate towards what they're doing. We see a lot of people still dying in hospital, and that speaks to this overly acute model, but it also speaks to a lack of community support. So things like district nursing and really effective out-of-hospital care systems. There's also kind of a cultural preference that feeds into this, but a lot of it's to do with structure of the healthcare system. So we've got some of these key problem statements, if you like, in most health systems in Asia. We've got this limited role of GPs. GPs don't really play the sort of family doctor role that we would see in the UK, and as a consequence, when people have chronic diseases, often they end up with exacerbations and end up in hospital, which is no good when we A, don't have the financing, and B, don't have the infrastructure to manage that in the longer term. We've got this overly acute model where people end up being referred into hospital quite often rather than being managed in the community. Where people do have insurance, we tend to see what we call a buffet syndrome. So people, perhaps they've been reliant on these big public systems, long waits and so forth. They're finally able to purchase a private health insurance system, and they go a bit wild, and they end up having lots of diagnostic tests and lots of things which they don't necessarily need, because it's kind of there's kind of often no guardrails around it, and therefore there's a need for a new approach. And I think this is all really relevant when you think about your solutions and services. I think, my first point of call is always like, what problem are you trying to solve, and do you recognize the problem you're trying to solve within this list, because that's a key part, I guess, of making your case. This just highlights another area. I know some of you are working in the space of trying to sort of integrate large data sets and make sense of them. On the left-hand side, just to hammer home the point around GPs not really being the same or occupying the same role as they would in the UK. That's true, and on top of that, the other issue that we've got are where there are GPs in place, they're often working independently rather than as part of a clinic network. And so you have enormous fragmentation in data, and it's very, very common for people whose records don't follow them around the system to end up having multiple consultations with different doctors. They have lots of diagnostics redone, blood work redone. There's lots of polypharmacy issues that go on because we've got this enormous issue around fragmentation, coupled with a lack of real understanding of the role and benefit of family doctoring. So I just wanted to highlight that and to say, for those of you that are working in that space, there's definitely opportunity to think about how you can play a role in joining up some of that data and who you would do that for, whether that's for governments to help create centralized e-health records, or whether it's for insurers who are kind of pulling their hair out and getting all of this disparate information and having their policyholders go to lots and lots of different providers in a not very structured way. I'm going to skip over these. So I did want to just pause on the issue of private insurance, because like I said, from our perspective, I think for companies coming out to this part of the world, sometimes it's easier to do a deal with some of the private health insurers than whilst you kind of build your capability and credentials to be able to bid on some of the large public sector pieces that are going out to tender. So there's a couple of things I just wanted to mention about private health insurance. One is, at the moment, it's often not profitable. Even though the premiums are really, really high, the plans are often not very profitable. And that's in no small part because the claims rates are extremely high, and not just in volume, but the value of those claims is also increasing substantially. And we've got very high levels of medical insurance inflation, which you can see Singapore on the left-hand side, but the same story is true in other markets. It's actually increasing much faster than GDP or CPI. So in effect, over time, private care is becoming more expensive rather than more efficient and more accessible. So this is a real challenge. And this just gives you a sense of some of the surgery charges. You can see private wards versus public wards, and in sometimes this is Singapore, and Singapore is actually one of the better regulated markets. It's 3 times more expensive, and in some markets we've seen it up to 10 times more expensive when you compare public with private. This is another way of showing it. We've picked out a hip replacement. For the UK, when we look at the cost of a hip replacement, if we compare the NHS to the private sector, you can see it's about 1.5 times more expensive to get it done on average in the private care sector. In most of the markets in Asia, it's much more expensive. So we've got some of these major issues, and so this is the #1 problem, if you like, that insurers are dealing with. It's how do we tackle these extremely high costs in a meaningful way, and for us that's a really good way to think about the offerings that you have. Can you help them resolve any of these 3 problems? One, the volume problem, so unnecessary diagnostics, unnecessary testing, defensive medicine practices. The pricing problem, so a lack of transparency around pricing, overcharging, perverse incentives. So oftentimes prescribers are allowed to be the same as the dispenser and the lab owner, so you get lots of perverse incentives. Or the quality problems, so long lengths of stay, surgical revision rates, unnecessary prescribing, and so on. If you can help resolve one of those, then that's often a very good conversation starter to have with the insurers, because these are the 3 major issues that they are grappling with day in, day out. This is just a study that we did to look at the amount of those claims costs that could be avoided if care was delivered in a more efficient or effective way. And if you look at, for example, prescription practices, around 33% of all claims costs could be avoided if there was better attention paid to what was being prescribed and if that was appropriate. Data and analytics are also very much needed by the insurance community. These are common questions that you'll be familiar with from the UK. So things like, is the rate of CT or MRIs per 1,000 of the population reasonable? Have we got the right length of stay? So on and so forth. Very basic questions. These questions would be answered normally in the UK by the submissions that have to go to CQC and other entities. We often don't have those regulatory bodies in this part of the world, and so insurers are trying to answer these questions themselves, often off the back of a lack of structured data or very poor data. So there's a real need to help them understand even where they are now and how bad it is. So data analytics is very much needed to help resolve some of these questions. And then there's also a desire to move from what we currently have now, which is fee-for-service models, up to more value-based financing, so shared risks or pay for performance, giving people incentives if they're delivering care in an efficient way, a bit like QOF does in the UK. But at the moment, it's very difficult for insurers, both private insurers or social insurers in the markets where they exist, to move from fee-for-service models because they don't have good enough data, and or care isn't structured in an efficient way to allow anything but fee-for-service models. But this absolutely has to be the direction that we go in this part of the world if we're going to manage that cost problem and the issue of people aging and also incurring more non-communicable diseases. So these are just a couple of the things I've mentioned. I just wanted to summarise some of the priorities for insurers. They're working on cost management, so trying to understand their data better, trying to optimise provider networks, trying to do some analytical modelling. They're also trying to move towards those value-based financing mechanisms in order to manage cost. They know that they need to invest in telehealth, but they want a structured approach. We've seen a lot of telehealth companies come into play over the past 5-6 years in this part of the world, but oftentimes they're just replicating the same in-person consultation via a different medium. And if the unit cost is not substantially different, then all we're doing is just giving an alternative way of doing the same thing. So they want a more structured approach, which actually starts to help patients manage their conditions differently. And then they want to bring in off the back of this, new innovative products, particularly mass market products that are going to help them retain and grow their customer base. So that's just a quick summary. I did have some slides in here around the growth in the medtech market and so on and so forth. But actually, I think it's better to have spent the time walking through some of the problems that we've got and some of the potential things that you'll need to think about when you're developing your business models and propositions for this market. So I'll stop there.
Thank you, Thalia. That was so thorough. And I think the takeaways that I get from that are really clear. Problem statement, what is it you're trying to solve? What's your unique proposition? And also be very mindful of the subsidiary sectors that you can also impact, such as insurance. I think that's a really strong message as well. Thank you ever so much. And I'm going to quickly move on to Nick. Nick, hopefully you're there and you're not having technical issues, but if you'd like to take over.
Thank you very much. Let me try and share my screen. The last time I did this, my computer decided to shut down. So if that happens, then I'll try and get back in as quickly as I can. Hang on a second. What about this? Is that working?
Yes, you just need to move to present.
Like that.
Perfect. We're seeing your slides, your presenter slides though.
Yeah,
this is fine.
Okay. Okay. One second. Okay. Hi, I'm Nick Hanna. Thank you very much, Nicole, and great presentations from Kimberly and Thalia, sort of setting the stage. I'm a lawyer. I've been here for 14 years, and I work for a company called Pinson Masons. It's called Pinson Masons MPLA in Singapore. It's been around, I think, for 15 or 20 years. Some of you might have heard of Pinson Masons, but Pinson Masons is an international full-service commercial law firm. I head the corporate practice here. We have 60 lawyers in town, and we do a variety of work, a lot of which is based on medtech and the growth of Singapore. Our clients include sovereign wealth funds, so we do a lot of work for sovereign wealth funds, multinationals that are coming inbound and from the region as well, sort of going into other areas. We have 26 offices around the world. We're well represented, and our clients are sort of commercial based. We have a lot of medtech clients, and that's a focus of what I'm doing out here. I have been doing predominantly in the last sort of 6 or 7 years, in particular, helping medtech companies from abroad come into to Singapore, and medtech and health companies going outbound from Asia, either doing fundraising to grow their companies if they are startups, or larger concerns doing some IPOs. And we've taken some companies, or we're taking at the moment some companies which are in the medtech space into London. One is doing an AIM deal and another one's listing on the main board of the official list. So lots of activity going on here, lots of M&A stuff. We do a lot of M&A stuff, corporate restructurings. We advise companies that are in medtech and health science, what the regulations are out here, make sure that they don't fall foul of the law. So with that introduction, I wanted to sort of basically talk about the Singapore business landscape. And as you can see, that is Singapore. A lot of people have an impression of what Singapore is. It's very modern. It's a world financial hub. I've been living here sort of almost 15 years. It is only 719 square kilometers. The capital of Singapore is Singapore. It's an island city-state. The currency is the Singapore dollar. It was founded, as many of you would know, from British colony. Everyone speaks English here. And the World Bank classifies this as one of the easiest places to do business, ranking it second in the world. Its population, I think that Kimberly mentioned this, but we have about 5.7 million people here. A lot of them are expats. About 25% of the population is expat community. Singapore is very pro foreign investment policy. It's easy to set things up, and you'll see how quickly it's kind of like a plug and play country, which makes it easier for people to come in and to start and focus on their business. So they have a lot of international trade agreements, particularly with the UK. There are many developments which we are involved in to help from government to government to build up the commerce, to build up the trade. And in many ways, it's sitting in the heart of Asia. We are the hub for Southeast Asia, but we connect up Asia Pacific in many different ways. Our legal system, so it's based on English common law. It's very similar to that. It's stable, it's uncorruptible to a great, it's super efficient. I remember in the days when I was a litigator in the UK, for the first 10 years of my life, I was there, and the wheels of justice sometimes turned a lot slower. If you ever found yourself in a dispute in Singapore, the court systems would push it through within a year. You would have a judgment. There's huge integrity, it's relevant, it's efficient, everything's online, so it's very modern. People are filing papers online and stuff. And we have also a world-class arbitration system here, dispute resolution, which was set up about 14, 15 years ago. And it is really premier, so it works extremely well. So good legal system, great country, has a lot of going for it. How do medtech, how do health companies from abroad sort of fit in? I think I wanted to start by just saying that Singapore exports very little. It doesn't produce very much. And what it is it's a nation built on services. And one of the biggest services that it built itself on was the financial services. So the fabric of Singapore is, you can see lots of skyscrapers and there are lots of banks in town. But the government over the last 10, 15 years has been conscious that it should build out other things, and it has spent billions of dollars on science and technology, and has very close to its heart the medtech environment. And so in many ways, Singapore is really trying to be a hub and to be a world-class leader in this place. I think Kimberly and also Thalia mentioned the problems that we are having out here with regard to a rapidly aging population. And to that extent, that is something which is a big concern in this particular area, and the need for companies to come out to help in this area is particularly viewed upon favorably. How we've dealt with COVID-19 as well. The government has been very proactive and sort of got a handle very quickly on what controlling measures it needed to do and how to get itself ready for the pandemic. It is estimated that by October of this year, 75% of the population will be vaccinated, and hopefully things will open up a little bit better. So anyway, to talk to this slide, A-STAR is basically the government's technology. It stands for the Agency for Science, Technology and Research. It's where the public sector and research and development meet. The objective is to try and collaborate with the public and the private sectors to benefit the economy, society, healthcare as a whole, urban living and sustainability. It's offering the best in technology, the best in people and equipment. And there are many different sort of grants and funding routes. Currently is $150 million earmarked for investment for SMEs. And very closely connected is also NUS, which is the university, and NTU. They are world-renowned medtech programs, and we have the state-of-the-art science parks here, Biopolis, the Singapore Science Park as well. Excellent research and development labs in existence. And it has attracted the likes of over 30 really big, well-known medtech companies to build out here and to do great things. So with that in mind, how would you set up a company or set up a business out here? If anyone's interested, then they should definitely get in contact with me to help them with that. That is probably the #1 thing that new clients are calling us up about. They're saying they're thinking to come to Singapore. How do we set up? What do we need to do? And we will put you in touch with the right corporate secretarial agency. In short, it's not difficult to do. It's really fast. It's efficient. Most of it is an online registration system. The company's house here is called ACRA, which stands for the Singapore Accounting and Corporate Regulatory Authority. Things that you might want to be thinking about is whether you want to set up a public company or a private company, whether you want to be protected by limited liability, much in the same way as an English company, limited company would work. What type of activities are you going to do? Names and particulars of who the directors are going to be and key personnel, who are shareholders going to be, what's the proposed business, and does it need to get some kind of government approval if you want to use the word Singapore, or there's some keywords where you have to actually go to government departments to get their consent. You only need to have one shareholder. The director, company secretary needs to be at least one of them needs to be a local resident in Singapore. And you can appoint nominee directors from corporate secretarial agencies if you're not planning on coming out here immediately. You need to appoint auditors within 3 months of incorporation, and a company secretary definitely within 6 months of incorporation. The way in which we deal with share capital concept is quite a simple concept. We don't have par value or authorized or all these other things that we have. You just need to have one share fully paid at a subscription price fixed by the promoter. You'll need a registered office. You will have to think about sort of post incorporation matters like holding AGMs, passing resolutions, but it is not much different. It won't be too different to how you're running companies in the UK. I've set up this slide, but I'm not going to go through it. But there, you know, branches. If you want to set up a branch, what that entails. Most people will set up subsidiary or independent corporate entities where that is based, and fundamentally, it's one of the easiest things to set up. So, company setup. What else do you need to know? Well, because you are specific to probably medtech life science, one thing not to avoid, and this is where we get involved quite heavily, is the HSA, the Health Sciences Authority. Basically, if you import, if you manufacture, if you supply anything like therapeutic products, health supplements, medical devices, cell tissue, gene therapy, or even cosmetic products or tobacco linked products, you need to register with the HSA. And it is a complex thing. We're currently representing a large Japanese conglomerate which wants to advertise certain products in its devices in Singapore, and the legislation is complex. It's established, but it's complex and it takes time. So this is something where you will need to get professional advice as to whether you can actually come in and whether you're licensed to go and do these kind of things. But assuming that you can, and assuming that you want to start, you might need to have people in your organization, and therefore the people that there are different types of work passes that exist for you. They're fairly simple and quick to set up pre-COVID. Obviously now the restrictions have created some difficulties in getting people into the country. So this time lag obviously should cool down, I would hope, from later in the year. But fundamentally, the two main types, the professional work passes and the skilled and semi-skilled work passes. Most common is the employment pass. Most professionals, managers and executors will need to get one of those. There's a minimum of 4,500 Singapore dollars, and you're going to have to send in some papers on your qualifications. An entry pass is for foreign entrepreneurs keen to operate businesses in Singapore that is venture-backed. It possesses some kind of technology, and there isn't a minimum salary needed. But if you get one of those, it will be valid for 1 year and then extended as you go along every 2 years. And then there are sort of personalized employment passes, or PEPs. These are for the high earning people that are earning at least 12,000 or 144,000 a year. That you can apply for that type of pass. And an S-pass holder, a semi-skilled worker earning about £2,500. Again, they'll be looking at qualifications and relevant experience. But yeah, so we have a huge employment arm at Pinson Masons to help get you into the country and to set up your employment needs. So
sorry, Nick, I just thought I'd give you a heads up, just a couple of minutes, if that's okay. I've
only got a couple of minutes left. This is the last part. So yeah, I do what's told on the tin. So I will just. So the Singapore government offers a number of grants and incentives. You know, EDB actually very kindly went through that in quite a bit of detail. If you want to think about it, 99% of all SMEs 99% of the economy in Southeast Asia is SME based. It makes up the economy, so it's huge. It's the backbone of Southeast Asia. And so, you know, the SMEs represent the fourth largest economy in the world, and basic requirements for most of this stuff is that, you know, you need to have a Singapore company. It needs to be less than 5 years old. It's got to have activities that are sort of connected, carried or need to be carried out in Singapore. It needs to be 30% locally owned, and it has to have a turnover of less than $100 million or less than 200 workers. But then you can apply, and lots of people, lots of foreigners apply for grants. I would say one thing, that grants do tend to take a long time to get, but people are successful in getting them. I picked one here, the EDG Enterprise Development Grant, which is a very common one. It's again aimed at SMEs, promoting sustainability for small companies. You can apply up to 80% of the qualifying costs, whether it's for consultancy or training or equipment as certification. But during the COVID times, it was extended to 90%. And that is it. I've left some quite important numbers that might be helpful to you. I hope it's been a useful eye opener to you doing business in Singapore, and I'd like to thank the British Chamber of Commerce here, Nicole, for allowing me to say a couple of words. So thank you.
Not at all. Absolute pleasure, Nick, and some real golden nuggets in there. I think, you know, the reality of setting up here is incredibly important, and how everybody goes about doing that. I think the grants and incentives as well are certainly worth investigating. Those contacts you've shared are really important. Thank you. Anand, I'm going to hand over to yourself, last but by no means least.
Great. If you can hear me?
Yes,
okay.
Absolutely.
I will try and do my tech bit and share my screen. Okay, here we go. So last presentation, last speaker syndrome. I'll try and whiz through my slides. I have 20 odd slides, but I will just focus on probably a handful and then let you, look at the recording to digest some of the other slides. So my name is Anand. I'm a partner at Bird & Bird. I practice in the IP department, and I'm here to just fill in this last bit on IP protection. Once you've been, obviously persuaded by everybody else that has come before me that Singapore is a great place to come and do business in the healthcare life sciences sector. Okay. So what is intellectual property? So let's say you're the biggest and best football club in the world. You have to register your IP and make sure that your stuff is protected. We've got a whole series of IP there. You've got copyright, trade secrets, confidential information, registered designs, patents, trademarks. So these generally form the backbone of IP, traditional IP around the world. So what I wanted to do was do a case study for the iPhone, and just to show you that in one product, there are so many different types of IP that can be protected. So you've got patents, and the little news clips on the different types of patents that have been in the news for Apple over the course of time. You've got registered designs, so that protects the shape and so on, and I'll go into detail later on. You've got trademarks, obviously, so the iPhone mark and then the Apple and so on. So those are trademarks that are protectable, even Siri. And then you've got copyright, which also includes things like software over there. And trade secrets, one of the types of IP that's not registrable per se, but definitely protected in the UK, Singapore, and many, many countries around the world. And you will see that trade secret theft also has been in the news in many countries, in many places. Huawei and Apple have had a few fights over the course of time. So just some general useful information for you. So registrable IP filed with IPOS. So IPOS is the equivalent of the UK IPO. And I listed there 4 big acts which cover the IP sector here in Singapore: Trademark Act, Patents Act, Copyright Act, Registered Designs Act. I've left out a new act, a newish act called the Geographical Indications Act. Because that usually covers things like food and the like, so that's probably not something that's relevant for you. But if indeed you, when they come up with wanting to bring into Singapore certain products that are protected by a GI, geographical indication, then there is protection for those products as well under an EU-Singapore free trade agreement that was signed. Nick touched on this. The Health Products Act is also a relevant act for some aspects of the life sciences and healthcare space. For example, there is patent linkage for bringing in therapeutic products into Singapore, and I'll touch on that a little bit later on. So I'll start off with copyright. There are some new developments in Singapore, and there will be a revised act that will come into force later this year. The bill is now being read in Parliament, and we will see developments very shortly. So generally speaking, what does copyright protect? Well, all kinds of music and other kinds of works, software, expressions, not ideas. There is automatic protection. So copyright in Singapore is not registrable per se. There is automatic protection. You see the life plus 70-year term protection for you, and basically gives you the right to stop other people from infringing your rights. Trademarks. Trademark identifies source of goods, services. So you've seen some of the trademarks I showed you earlier. So the Arsenal badge, Arsenal itself can be a trademark, Starbucks and a few others. And it protects your goodwill. Registration confers quite a few advantages. Initially, what you will get is 10-year protection here in Singapore, like in many countries. Usually it varies from 5 to 10 years, depending on which countries. For Singapore, it's 10 years. And registration is in relation to specific goods or services. So there are generally 45 international classes of goods and services, about 30 odd goods and the rest in services. And when you file your trademark application, you have to identify which class or classes you want protection in, provide a sample of your mark, and go through a registration process. And it generally is quite fast. Takes an average of 9 months, and sometimes even faster. That's assuming nobody tries to block your application. Gives you exclusive rights to stop other people using your brand. This word territorial you'll see for a number of these IP protection rights, and that is simply that if you want to get your trademark protected, you need to make sure you have a registration in each country you want protection in. So for example, in the ASEAN region, Association of Southeast Asian Nations, there are 10 countries, and if you want a trademark protected in all 10, you've got to file 10 trademark applications in all the countries. So these are some examples in your space. So you've got GlaxoSmithKline, GSK with their nice trademark, Medtronic and their iconic mark. Bioformis, you've heard of earlier. It's a homegrown company which has some interesting devices that also monitor health, and it's doing quite well actually. So patents. Patents protect inventions, and the 3 things you need to take away for that. They need to be novel, inventive or non-obvious, and have industrial applicability. The protection for patents is 20 years from the application date, and patents take a little longer because they are obviously more complicated. It's not just a brand, but it's really an invention with a lot of words, specification and description, claims, drawings, and everything else. And generally, it gives you certain types of protection to make, sell, import, and so on. So the Patents Act has quite a few sections dealing with infringement of patents. It takes a long time and it costs more, but generally speaking, as you would have seen in the patent world out there, where you have fights with Apple and Samsung, the kinds of damages you can get for patent infringement could be huge. Singapore, you can get large damages, nowhere near as big as the US, but definitely patents are a form of IP that many companies feel that it's very important to go and secure, especially if you're looking at investments and the like. So here, some examples of registered patents. So you've got, this is from Johnson & Johnson, one of their types. So this is in the space of treatment of seasonal affective disorder. And then you've got Vibron with an interesting intravenous catheter device. These are all extracts from the Singapore Patents Register, mind you. And then we move on to registered design. So it's a different type of intellectual property right. This protects the visual appearance of articles. So for example, shape, configuration, pattern, etc. It does not protect functional features. So that's something you need to bear in mind for designs. Now, protection is for a maximum duration of 15 years. So patents was 20 years. Registered designs is 15. Trademarks, I didn't highlight this, but trademarks, although it's initially for a period of 10 years, it can go on indefinitely. So you can keep renewing your trademark protection, and can go on. So some trademarks around the world have been protected for maybe even 100 years for now. And so the exclusive rights again gives you okay, we have a Registered Designs Act that covers the rights that you can exert, and rights again are territorial, as I touched on earlier. So these are some examples. You've got Novartis and MSD Merck and Dome with interesting designs that they got protected. And again, touching on Apple, Samsung, another type of fight that they had over the course of time was, simply the design of the iPhone, which Samsung was accused of copying. So quite powerful protection here. Medtronic has their own interesting little implant delivery tool that's protected here as well. So trade secrets, last bit of IP I want to talk about. What do they protect? Protected by common law from unauthorized disclosure. So formulas, know-hows, customer lists, these are some aspects of trade secrets or confidential information. Now, just to take a step back, patents, one type of patent that can be found is a process patent. So manufacturing, many companies have processes that they do not want to disclose. So one of the trade-offs for patent protection is that you have to disclose and share with the rest of the world what your invention is. So when you have your patent application published, the whole world can see what you're trying to protect. The trade-off is if it's granted, you get 20 years worth of protection, but you have to share with the world so that the world can, learn from your invention. Now, what some companies do is they don't want to tell the world or share with the world, and so they keep things secret. And so even some manufacturing processes are kept secret. The Coca-Cola formula, I understand, is a trade secret, and so is the KFC recipe. So these things are kept very closely guarded, but you need to make sure that it is closely guarded and that only a handful of very key individuals keep hold of this stuff. So there isn't an act that governs this. It's covered by what's called common law. You have an earlier slide I showed you, there have been fights over trade secrets where key employees leave and then they share this information, although they were bound by confidential conditions. Okay, this is part 2.3, strategic considerations for Singapore. So Singapore, you've heard a lot about Singapore and how amazing things are. I'm just going to add a little bit to that, just really persuade you that this is a great place to come and register your IP. So Singapore is, is signatory to many conventions. So we are signatory to the Madrid Convention for trademarks and the Patent Cooperation Treaty, or the PCT, for patents. And so this is kind of a one-stop shop to try and register your IP rights in many countries around the world. You still need the individual entries, but you can do it in a more seamless sort of fashion. Singapore is also part of certain work sharing cooperation arrangements. So you've got the ASEAN Patent Examination Cooperation, and then you've got Patent Prosecution Highway. So a lot of things can be done faster and more efficiently because we have signed up to a lot of these international treaties and so on. Ease of enforcement, so you've heard about our IP laws, our general laws actually deemed to be very good and strong. And second bullet here, Singapore and UK IP laws have broad similarities. So our IP laws were originally based on the UK Australian legislation. I will say that in recent years, we have started to slowly move away. And one example recently is something called the doctrine of equivalence in patents. How do you construe certain patent claims and words in patents? And the UK court changed course after centuries of looking at things in one way. The highest court in the UK just 2 or 3 years ago decided to adopt the doctrine of equivalence. In Singapore, the Court of Appeal, our highest court, said, no, not quite for us just yet, because Singapore felt that would give too broad a protection for patent owners. So that was something that we haven't adopted, but by and large, very similar systems between Singapore and the UK. And then lastly, availability of ADRs, alternate dispute resolution options. So that's arbitration, mediation. We are quite a hub for a lot of these alternate dispute methods. So even if a lawsuit is filed here, the courts are very quick to push parties to try and resolve things out of court. And mediation is very popular in settling a lot of our disputes here. Whether to register some other points, if you want to go into the ASEAN region, and so I've listed the countries there for you, to Brunei, Cambodia, and so on. Freedom to operate the future expansion into ASEAN is being considered. So you can file a trademark in Singapore, get protection here, but if you decide later, 2 years later or whatever it is, you want to then expand to Malaysia, Thailand, and so on, what we normally would recommend is that you also do some clearance searches to make sure that somebody else, sometimes there are squatters, that if you become popular in one country and if you haven't got protection in another, a lot of squatters would then sometimes take your mark and then file it there and pretend it's theirs. So that's the kind of thing you need to look out for in any country, frankly. But for the ASEAN region, that's something that we also recommend to our clients. Obviously, the big and important part about filing IP protection is it creates investor confidence, right? So if you're looking at funding coming to you or investments, having an IP portfolio is very important, and it's something we strongly, again, recommend that our clients do here. Protects innovation and gives you competitive advantage in tenders. So even for government tenders, sometimes they want to know that your IP is registered and that you have some basic level of protection. And last point, that you can use it against your competitors. If you have something filed, registered, you can then assert it as and when it's necessary. This slide is just to say that in last year, government here has sort of rewarded certain companies for doing a lot in the COVID-19 space. So, for example, there is a company in Para 8 down there, so Lucent's Diagnostics, company that is in the oncology space, and they actually they do blood testing, and they also helped, I think, develop new methods to help for detection of COVID-19 as well. And so the government is always looking to give out incentives for companies that have stellar IP that is registered here, and and there is quite a lot of recognition given to companies when they file patents or other inventions that are very useful, particularly in this space that we're all in. And so last bit, hot button topics. Patent linkage I touched on earlier. There have been developments in Singapore in this space where when you want to introduce a therapeutic product to Singapore, you need to declare patents. And so there are many cases. I'm involved in quite a few cases on behalf of generic manufacturers of generic products. And this is a very live area here in Singapore. So you need to do some checking up before you venture into the space. Now, recently, because of COVID-19 and the like, you have a lot of, you've heard from the EDB, you've heard from actually everybody before me, that there have been quite a lot of developments. So you've got a lot of tracing apps, teleconsultation, a lot of developments in AI, medtech space coming to Singapore. And so a lot of these things have gone ahead of legislation that we have. So the government has been trying to catch up, and we have something called the Healthcare Services Act that will be rolled out over the next 18 to 24 months. And with that, there will be regulation of some of these things. So even, frankly, telemedicine today in Singapore, you can get telemedicine advice and so on, but it's not quite regulated just yet. So this is work in progress, and the law is catching up, and we will get there. And the government has been alive to these things. So these are areas that are all developing. So it's really a watch this space sort of thing. But as I mentioned earlier, the Copyright Act is being amended, and it's also taking about some of these new developments that we are seeing. And last slide, I think, we've got accelerator programs. So it does take a fair bit of time to get certain IP registered, but we do have something called the SG IP Fast Track, where in the healthcare space, you can get your trademarks filed a lot faster, and some patents filed faster as well. If you, I think there are X number of applications that can be filed within a certain month that fall into this. And for individual companies, X number that you can do under this scheme within a year. But this is just to help, again, with the innovation in certain spaces, including the healthcare sector. So that's, I think, it from me. And so back to you, Nicole.
Wonderful, thank you, Anand. So I am going to, just ask you to close down your presentation, which would, and that just leaves me to thank everybody for joining. Now, we have had a couple of questions. I believe they've both been answered live, but I will just reiterate that the recording of the presentation today and the webinar will be available as soon as possible. So we actually put that out onto our website, but also we will forward details onto the attendees today. Should you have any questions at all that you'd like me to direct to any of the speakers today, please do get in touch. My details available on the BritCham Singapore website, but in short, my email address is nicole@britcham.org.sg. Anand, Nick, Kimberly, and THALIA, please, thank you so much for your time today. It's been really great. We've covered such a huge amount of information. I appreciate we've run over slightly, so apologies attendees, but I think you'll agree that it's all been very worthwhile. So is there any final words from the speakers still on the call at the moment? I think we've covered a lot, haven't we? That's amazing. Well, okay, that just leaves me to wish you all a very good day in the UK, a good evening in Singapore, and yes, please do get in touch if we can help you at all anymore. Thank you, and good night. Good afternoon. Bye-bye.